Hey guys, Spac Daddy Doug here. Today's video is part 2 of a series that I'm doing where I'm going through SPAC stocks that have not had their pre-unit split yet, and they're all having the pre-unit splits later this week. So what that means is typically a SPAC stock starts in the unit phase, and then after 52 days they break apart into commons and warrants and also units. What the benefit of this is, typically after the SPAC stock breaks, the stock prices move up because additional people can buy into these SPAC stocks. What I'm doing in this series is I'm going through every single SPAC stock because every SPAC stock starts at the units phase, and I'm going to be delivering these to you the week that they are breaking apart. So today I have 4 SPACs that are going to be breaking apart this week, and we're going to follow these along and see how they're doing. The benefit of these videos is I had to painstakingly go through each SPAC stock, go through the S1 filing, and you find so many interesting things. In today's video, I have one of these 4 I'm going to be talking about is so good, I highly recommend it. But with that being said, this video is for entertainment purposes only. Anything I say here is for entertainment purposes. Please do your own due diligence. Talk to your own investment advisors. I am not your investment advisor. I'm just passing along information I find, and I could be right and I could be wrong. But hopefully always right. So the 4 I'm going to be talking about today is, let's just start off with Concord Acquisition Corp, ticker symbol CND. They're raising $250 million with 25 million units. And like I said, those units will split accordingly this week on Thursday. Currently, the stock is currently trading at $10.81. The unit breakdown is 1/2 a warrant. So for each stock you own, you'll get 1 common share and 1/2 of a warrant. And what they're aiming to do is they're looking for a financial services or fintech company specializing in payments, enterprise software, data analytics, growth, and they need some potential financial operations, strategical or managerial guidance. So this SPAC stock, Concord Acquisition Corp, they are a great buy because in the industry that they are in, fintech, it's a very hot area, especially in the payments. Who knows? They could be picking Stripe. I think they're a little too small for that. But their management team, which is the other key part, Bob Diamond. So he's the chief executive of Barclays, or was. Jeff Tudor, he's a hedge fund guy, investor in undervalued companies. And additionally to when I was reading through their S1, this company is not this management team is not someone that's just going to look to buy a SPAC stock and flip it. They are actually looking to help out this management team. So they're going to probably go into a team that's undervalued, that needs management help, and then build them. For that aspect, I always like management teams that are like this, that will kind of find the diamond in the rough and fix it. So with that being said, I don't own this, but I do recommend this. And at $10.81 with a 1/2 a warrant breakdown, it is a good value for the price. Typically when these SPAC stocks break, I'd say warrants usually are $1 afterwards, the stock price would probably leverage at like somewhere around low $10 range. So I think if you buy it, you'll probably make easy money this week, given that the market stays on the path that it has in the past few months, and it keeps going up. All right, number 2 here, ticker symbol RAAC. This SPAC right here, please don't share what I'm going to say here until at least Tuesday, because I have no money in this one, and I'm going to be buying it because it's that good. And it is so under the radar. Nobody has picked up on this from what I've seen online. So ticker symbol RAAC, Revolution Acceleration Acquisition Corp. They are raising $250 million with 25 million units. Their management purpose for the SPAC, what they're looking to target, is we believe we are uniquely positioned, and they are, to capitalize on opportunities that can be unlocked by the convergence of innovation, government policy, and regulation. Okay, I read that and I said, all right, they're looking to do something with the government. But wait until I talk with this management team, and this will unlock a lot of things for you. So they're focusing on the digital economy, specifically, it looks like it's specifically healthcare. So they're looking like a fintech healthcare area. The management team here has previously invested into DraftKings in 2016, Sweet Green, some type of restaurant out there, Big Commerce, ticker symbol BIGC, Talkspace, Clear. If you've flown in the airports, you've seen those Clear devices, and Tempest, which is an artificial intelligence company. Now, like I said, The management team, what they're looking for is they're looking to leverage government policy on what their pick is. And interesting enough, let's look at the management team. John Delaney. If you don't know who John Delaney is, he was in the U.S. House of Representatives, I think for the last 7 or 8, until 2019, from 2013 to 2019, he was a Democrat. And I believe he might have lost his election. I'm not really sure what happened. But he ran for president in 2020 under the Democrat ticket and lost, dropped out of the race. So why is that so important? It's because of the government policy. These government guys, anyone who's in politics, they go in there, they're making $170,000 a year. They all come out multimillionaires. And the reason why is because they have these contracts that are set up and they always help each other out. They invest into each other's companies. They know where the money is made. So these guys go in making $170,000 a year and they come out multimillionaires. Now that this guy is creating his own Spac stock, and he's looking for government policy, especially that Joe Biden has gotten, and Joe Biden's going to be focusing on healthcare and who knows what else. The buddies help each other out, and whatever he's looking to buy is probably good to get into. Who else is on this team? Steve Case. If you don't know him, he's the founder of AOL. Anyone else is a little bit older probably knows that and is very familiar with Steve Case. He's also been a CEO of several other companies before. And the team also has a lot of other entrepreneurial CEOs who are on the team. One unit is equal to 1/3, one share and 1/3 of a warrant. And warrants trade 1-to-1 after this, after merger. The stock price is unit price is $10.92. I don't think people understand the SPAC out here. And then once information is known about who's on this management team here, I expect this SPAC to kind of blow up probably over the course of this week. So that's what I'm saying. Don't share this information until at least Tuesday until I can get into this. There's been a few other SPAC stocks, like PIPP was another unit breakdown that happened like 2 weeks ago, and it shot up 20 or 30% of some of the people who had relationships with the Biden administration. So it's all about connection and ties. RAAC is definitely a strong buy based upon this, and the warrant, the unit price does not reflect people having common knowledge of this. Number 3, ticker symbol MUDS, Mudrick Capital Acquisition Corp. 2. You might have heard of them in the first time because they just closed this SPAC. They merged with a company called Hycroft Mining Holdings. Right now, the stock is trading, their common shares is trading at $7. Not that good. But when you look a little bit more into what they're looking for, they actually have a management team. They have 11 investment professionals, 26 seasoned employees that work for here. Now, they are looking for a distressed business to restructure a company that's going through a bankruptcy or something similar, targeting a company between $750 million to $2 billion. I don't know too much about Hycroft Mining and why it's been down. Obviously, whoever they're looking for is going through a financial difficulty, and this team can help them bring it up. So when people are looking to invest in a new company, especially in the SPAC world, why are they investing in this company? They're going bankrupt. It usually does not look sexy. It does not look good. So a little bit more information about the management team. Jason Mudrick, I think he was on the other team. He's running it, but he started in 2009 with $5 million under assets under management. Now he's got $2.5 billion. So I don't know who he's going to be picking. This SPAC, I would not expect it to fly up through the roof. It's going to be definitely good value for the long-term run, in my opinion. Also, Hycroft Mining, if it's kind of the same methodology behind it, I'd probably expect the same. Stock is currently $10.70. Breaking on Thursday. Warrants are splitting 1-to-2. So you need basically 2 shares or 2 units to have 1 full warrant. Afterwards, they break 1-to-1. Mudrick Capital, it might be some value here in the warrant breakage, but this is one I'm probably going to skip on and invest in personally. And lastly, number 4, Nebula Caravel Acquisition Corp. Ticker symbol NEBC. Another $250 million SPAC. Looking for $25 million in warrants. That's what they're getting. And this is a very interesting one. The proposed business, technology, they're looking for something in the technology center. But same thing as the last one I said, between $750 million and $2.5 billion. The management team is from a company called True Wind Capital. You know who they are. They're a good management team out there that they specialize in different types of investments out here. So this management team is part of that. And they're leveraging the staff and everyone that they have on that management team. What they are looking for in this Spac is a growth company that's a mature management team with established technology, something that can't fail. So they're looking just to invest into a company that's already exists, that's proven itself. Adam Clammer is the founding partner from TrueWin. Scott Wagner is a former CEO of GoDaddy. Plus, there's a few other people in the management team with experience. Right now, the Spac is, the units are trading at $11.40. The warrants here, the break of the warrants is for every 5 units, you get one warrant. So the breakage is 1 to 5. Afterwards, it's going to be trading at 1 to 1. The warrants later on. What this shows to me is the warrant price is going to be pretty high in the sense that there's not going to be a lot of warrants compared to other Spac stocks. So roughly 20% of all the units are going to be turned into warrants. That's the breakage. So expect a high price on those warrants. It could be a good buy. I like the industry. But like I said, with all these different types of units, there is a strategy behind them. So typically, what you want to do is you want to get into a Spac stock early on. $10 units always usually start trading at. And then depending on the management team and who's, what their target is going to increase that price. Typically, after that units breaks on day 52, which we're looking at, so all these break on, I think, Thursday that we're looking at here on this week's, the stock price usually goes up. Volume increases, people are going to want to buy the warrants, people are going to buy the common shares, and that the unit is still connected to it, that price will usually go up. Now you have two options, what you can do if you don't want to hold on to the units. Option number one is you can just trade your units like they're going to be trading for regular stock. That warrant is how you want to calculate that unit is just count that the common price times it by the warrant price. So if it's splitting between half a warrant for each one of those, just take that warrant price and divide it by 2. And then at that point, you can see if your unit should be trading very close to those 2 prices. And then you could sell your units and you can pick up warrants. Or what you do is if you can call your broker and have them split that for you. I would definitely highly recommend this if the unit price is not met or exceeded the price of the common shares plus the warrants. And you can call up your brokerage. I know like Fidelity does it for free. It takes like a few days, but you call them up and you say, hey, I want to break these apart, and they'll do it to you for free. Other brokerages might have a small cost. I have heard other ones are very expensive. So depending on your brokerage, you might want to look into that. Robinhood doesn't even trade warrants or anything like this to begin with. So if you're trading on Robinhood, get a real broker. So that's what I have for today. This, like I was saying, this is a series I'm doing to see how successful it is. I could definitely do videos that are a lot more popular in nature, like CCIV, or any other popular Spac stock out there. But I feel like these are the ones that have the real value in it. So like and subscribe. I want to keep this series going, but depending on the popularity, I will adjust accordingly. But definitely have another one. I will be posting a video later this week on my first video, and I'm going to do a breakdown of how much they've increased since the unit split. And since I did that video last week, there were 5 units that split. 2 of them have broken apart already, and the spread is too large to determine how big the gain is, but they are between 5 and 20%. But we'll have some more information on how much those gains are for the week. Until then, don't forget to like. Don't forget to subscribe. It extremely helps out this channel. And then, until then, I'll have a couple more videos this week going through these units, and I'll talk to you guys next time.